My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So we have a lot to go over. Markets are in rally mode. Now, the key here is this a real rally or a bull trap? Bull traps, again, getting people who are starting to get nervous, thinking the markets could be starting to turn over, getting them very bullish before that rug gets pulled again. The charts are the answer here. You follow the charts. Whatever the charts are saying, that's what it is. At least that's the highest probable outcome. All right. So again, we're going to watch this very, very clearly here, and we're going to take a look at what the charts are telling us. But if we flip over to the charts to get underway here, we can clearly see that, again, we are looking at a market that is trending higher today. Again, this is after we had news out of the Senate that the government, again, appears to be reaching a compromise of sorts, and the government may be looking to reopen within days. And again, markets have been starting to get skittish. The economic data that we have been getting, even though it's not government data, again, we saw the Michigan consumer sentiment numbers on Friday, second worst numbers for consumer sentiment in history. So again, we know that investors, consumers are very, very nervous about the economy. So the idea is getting the government back open is a step in the right direction. The question is, does it solve inflation? Does it solve the debt problem? Does it solve all these other ancillary things? Remember, the AI CapEx is basically the only thing that's propelling this market. In fact, it's 90% of the US GDP right now. That basically tells you the entire rest of the economy is dead right now, meaning it's not moving. Now, we're not really in a hardcore recession, but at the same time, it's not really producing, all right, for the average American. All right, so let's go back to the charts and take a look here. What do we have? We have the markets, again, trending up. This was Friday. If you watch the weekly wrap-up on Friday, you can see, again, that I did talk about maybe there's going to be a government deal due to this move up, and that's exactly what happened over the weekend. Now, listen, it's not a done deal. It's not 100% done, but it does look very likely, especially with Thanksgiving approaching and all the travel. I travel quite a bit, and there's certainly been additional delays and cancellations because of that. And so coming into the holiday season, no one in the government wants to have the shutdown essentially affect holiday travel, people seeing their friends and family. All right, so again, futures are trending higher this morning. We are up about 50 points on the S&P 500, just chopping sideways after the gap up last night. If we flip over to the S&P 500 chart, you can see, again, the weekly chart is where we go, right? So for those of you out there that are like, oh, the bull market's still on, you might be right, but I go to the charts. And that's, again, my avenue to clearing out my emotional connection or kind of emotional mantra with the markets, if you will. And so if we look at this, we still have a defined pivot top right here, which matches our bull market from 2021. Notice the COVID low down here, bear market low, subsequent lows, and the liberation sell-off lows. So even the gap up today is only going to take us back to about here. It's got to get through this level here at around 6,900 for the S&P to really break and move to new highs, or at least continue the bull market stretch that it's been in. As of now, I go back and I say, well, what happened the last time we hit this trend line? We actually saw a pretty nasty sell-off. Just like when we hit the low end, we saw a great move up. We saw a great move up off this low. We saw a great move up on this one. So again, the parallel channel continues to be my answer to what is the market expected to do. I follow the charts. All right, take a look at this. This was pretty fascinating, folks. This is the Nasdaq 100, and the Nasdaq 100 here, what do we see? We see a trend line here with a parallel trend line at the higher end. Now, if we look at this, we can see very clearly we just tagged the upper end. We had the bigger sell-off in the Nasdaq on Friday. Look at how the Friday price action, the Nasdaq was trading down here, but by the end of the day, they saved it from breaking down. Again, whether or not you believe that insiders knew the news of the government shutdown potentially being done in the gap up today or not, clearly the charts knew that it wasn't time for the Nasdaq to have a major breakdown just yet, right? If you think about it logically, you could see it closed back inside the parallel. So as far as we know, it could come up like this. And it's obviously, this is where we're going to set to open here on the Nasdaq per the pre-market data. And so you can see again how the charts were guiding us, saying, wait a minute, while maybe the market highs are in, we don't know if the market highs are in, we'd have to see up here, but in the very least, it wasn't going to be an all-out collapse back down because the Nasdaq 100 closed back above the parallel trend line. And so again, a parallel coming to the rescue one more time. All right, take a look at the 10-year yield, guys. 10-year yield, really, even with the government opening, isn't doing much. Notice again, we're just continuing to chop sideways. We did break above this little downsloping parallel here, which gives you a short-term positive bias. That would imply that the economy is either going to stay decent at this point, or the inflation numbers are going to get worse once we start getting government data in the market. So again, we'll have to watch and see. But right now, as long as we stay above this trend line right here, around 4%, then the bias would be neutral to positive. First major resistance, honestly, is just a little higher, around 4.19%. All right, the dollar today, remember last week the dollar hammered on the underbelly of resistance. Notice how over here the chart rallied in 2022, surging higher on the DXY. It hit right here, then it hit again and again and again and again, only to finally break down, and now it becomes resistance. And so the idea is this is now resistance. It was support over here. Once it broke, it established itself as resistance. So the dollar is still at resistance. This underbelly trend line here goes back to the 08 financial crisis lows. And this is a trend line I'm watching because essentially what this is creating is a wedge pattern, right? A wedge pattern with a flat top. So essentially you have something like this, and then you have an upsloping trend here. And essentially you're just trading inside of this. And again, the question is, well, which way are we going to break? All right, here's your flat top. Here's your upsloping trend line. Which way are we going to break? Is it going to be to the downside? Is de-dollarization going to continue? That's my guess on it. Or are we going to have a run to safety because of a bigger issue in the financial markets that could push the dollar higher as a safe haven asset in the near term? So all of these things we got to monitor here, folks. But again, overall, if your outlook on the dollar is near term, there's always a chance it could go up on fear, on the fear trade. But if your outlook, like mine, is 5 years out on the dollar, is it going up in 5 years, over the next 5 years, or generally down? I am going on the downside of the US dollar. And again, that's one of the reasons why I like gold longer term, Bitcoin longer term, etc. All right, let's go to some charts here. So this is one of the charts I've been highlighting to you guys. This is the SMH chart that shows a potential major top in the semiconductor SMH ETF. Notice again in 2021, it was 102% above its 200 weekly moving average. In 2024, it was 102% above its weekly 200 moving average. Then it fell and corrected 40%. In 2021, it was a 45% correction. And here we are again. If you go to the high from about 2 weeks ago now, you were 102% above the 200 moving average. And so the idea here is very simple. We look at the charts, and the charts say that for some reason, once you get over 100% above the weekly 200 moving average, it tends to pull back price on the semiconductors. It's one of my theses for why I believe the semis are at or near a top. Speaking of which, let's take a look at some of these charts. Take a look at NVIDIA. NVIDIA was close to breaking down here on Friday, but just like the markets and the Nasdaq, it did get saved, and it is up today. So again, look at how the trend line, again, kept hitting here, up, pierced, but they saved it late in the day on Friday with that rally due to the government shutdown rumors that it would be solved. And it looks like the rumors had some truth to it here from Friday afternoon. Now, again, this chart is interesting because we're watching to see if it breaks. But if we look at Broadcom, Broadcom very clearly has broken and closed below its low. Now, remember, NVIDIA is a $5 trillion approximately market cap company. Broadcom's about 1.65 trillion. So it's the second biggest chip player in the semiconductors. And so that's one of the reasons why I look at it, is because you want to look at the big players. The big players are going to influence the markets the most because of their market cap. So if you look at this, it closed below we have to see, does it recapture today or does it confirm or neither? If it closes between the highs of Friday and below the yellow line, but above the lows, then it would just be a non-event. We just have to wait to see if it confirms the next day. If it gets back above the yellow line right here, then it would save itself and go back into this parallel or this wedge pattern. And if it closes below Friday lows, which is basically 336, it would confirm a breakdown. But this is a beginning sign. This isn't a breakdown per se. It's not a confirmed breakdown, but it is a warning sign where, again, it's vulnerable. Now, another chart in the semis that I'm watching very closely, and again, folks, I love to introduce other things into these videos for educational purposes. Generally, I keep it simple. We look at trend lines, which are parallels, just regular trend lines, double tops, double bottoms, gap fills, all of those type of things. But sometimes I like to bring in fibs, Fibonacci, and in this chart, I'm bringing in the RSI indicator, which is relative strength indicator. Now, look at what's going on here. Micron has been trending up, right? It's been trending up here pretty successfully, gone from a low just on September 2nd of around $114 to basically almost $250. In fact, this morning it was basically at $250. But look, high, higher high, higher high, higher high, right? But look at the RSI here, guys. The RSI has a very distinct negative divergence. Now, what's a negative divergence? Let's talk about it. A negative divergence in the RSI is when a stock is making, or a market or a crypto is making higher highs, the RSI is making lower highs. In other words, the RSI should be, if it was a normal chart showing strength, the RSI should also be making higher highs with this chart, the stock price or whatever it may be, the crypto price, commodity price. In the case of this chart on Micron, we very clearly see negative divergence, high, lower high, lower high. And even here with today's gap up, it's going to be another lower high. So this again, downtrend, uptrend, that's a negative divergence. Now, what that tells me is that big money is dumping into the retail enthusiasm for names like Micron, SanDisk, STX, WDC, these high flyers in the semi. These are kind of ancillary plays. They make memory, right? Especially SanDisk and WDC and Seagate Technologies, STX. So again, with all the data centers, obviously there's a need for memory, but historically memory has been kind of just like a commodity. Now it's getting hyped up here, but these valuations have got stretched at this point. And this tells me Micron is going to see a big correction. The trick is going to be, can it trade up to this upper trend line here? Notice how it got up here and rejected, but then the lower parallel got saved. But basically what we're looking at is around 256 or so. There's a major trend line there. And my guess is if it gets there, it does something like this, right? So it goes up here, then it pulls back to the lower end, gets a small bounce, and then has that bigger breakdown to it. Now, in terms of targets, the big target, first target's going to be around 192. Second target, there's a gap fill right here at around 181. So we're looking at, it's a hefty correction, but I'm going to see if it let's see if it gets to that upper trend line of the parallel here on the charts. Now, again, I talk a lot about the markets and how, they're in this kind of potential top, right? The S&P, the semis, these are chart analysis based on probability that has shown us historically these are where highs are made before corrections. But there are opportunities to buy. And I always want people to understand that there's always somewhere to play on the long side in a market, whether it's the defensive names like a Pfizer or a Bristol Myers or things like that pay good dividends. Or in the case of Friday, I bought Oracle with members of Smart Money stocks and ETFs. Let's take a look. Why did I buy Oracle? Well, Oracle, if you guys recall, had this monster move up when they announced their earnings. It was up 45%. It was the biggest gain for that size of market cap in the history of the markets, right? Again, it was about a $600-700 billion company, and it essentially went to $1 trillion valuation on that gap up right here. All right. In fact, Larry Ellison, briefly, who is the head of Oracle, right? He brought it public. He created it essentially. He was for a few minutes, he was the richest person in the world, even beyond Elon Musk. Now, since then, what's it done? It's gone straight down. And this is just, by the way, I mean, institutions have been dumping the whole way down to retail just bought hook, line, and sinker. Oh my gosh, their backlog is massive. Oh my goodness. And by the way, media and social media, but media inclusive, was all on this train. They were like, oh, it's the biggest, such a huge backlog. This is the most amazing thing. I'm looking at the chart and I'm like, guys, this is the top. This is how things top, right? And sure enough, that's exactly what happened. But on Friday, look, see this gap fill right here where it had the earnings announcement and gapped up, and then the secondary gap, it came right down here and bottomed out. Now, eventually it's going to go lower, but as a swing trade, I bought this because, again, it's down from 345 to 233, so $110 drop, and it filled the gap right here. All of this consolidation here. And so at least as a swing trade, this made a lot of sense, guys. Great level here. And again, we'll keep an eye on it, but I think it could rally back to maybe 270. But I think beyond 270, I'm taking profits on this. No doubt about that. All right, Monday.com. It is Monday. And so what better company to report earnings than Monday.com, except it's not a very good day for Monday. Monday is getting trounced by about 20% on earnings. This is a software operating system, cloud-based, where, again, it's basically a work operating system to keep track, keep people connected for working, etc. I'm sure some of you guys are familiar with it. But the stock is lower sharply. Now, if we look at where the trading levels are today, the first level, here's where it's trading, around 152. Notice there's a gap right in here. Can you guys see that? Where it closed right here and opened the next day up there. That's getting my attention. That's right around the 140 to 141 level. So as a day trader, mind you, this is only for day trading, but for day trading, I'm going to be monitoring this level here, this gap fill. If it comes straight down, let's say in the first 20, 30 minutes of the day, and fills that gap, we should get some sort of snapback on the stock worth $3, $4, maybe even $5 of upside. So again, keep that on the radar. Now, in terms of a swing trade, we have to zoom out on the chart. Now, again, what we see is this is a big bear flag, right? Big bear flag, so it's starting to roll over. As a swing trade, I would consider this maybe around $100 even number. All right, close enough to the lows here where I can dollar cost average, but also at a good technical zone. See all these lows right in here and even over here, and then on this side and there. And so basically a Pierce of 100, I would start to nibble as a swing trade long, but that's really all I'm seeing on that chart. Nasty sell-off. Now, today after the bell, Rigetti will report. Now, Rigetti, again, is one of the supercomputer stocks, right? It's had an amazing move, but it's also had a big correction. And so the question is there any hints as to what earnings will do when they report? And I would say at this point, no. If it had filled this gap on Friday right here, so there was a gap here and a little bit of a zone here of support, I would actually be on the bullish side going into earnings, because this is a major look. Ran up, consolidated, broke out, and this would be a retrace to the scene of the crime right here. But because it didn't do that on Friday, because of the late Friday rally, and now it's up a little bit today, I don't have a good read on this of whether it will flush down into this level on earnings or rally up. What I would say is if it flushes down to, let's say, 29, right down here, I might nibble a little bit on a long play on Rigetti after hours on earnings. But again, I'll have to monitor it, see what those earnings are, see if it does dump into that levels. If it rallies, first resistance would be around 39, and then obviously 44 would be second resistance, pivot top there. Another big earnings announcement this week will be CoreWeave. CoreWeave is a relatively newer IPO. Obviously, it came public in March of 2025, had that monster run. Since then, it's kind of just been chopping, right? And so one of the things I like to do is draw some trend lines. This is concerning to me on CoreWeave. Now, it hasn't confirmed below, but let's watch and see what happens here. Look at the trend line from the lowest point to the second corrective pivot low, and we did get below it, but it's unconfirmed at this point. So I'm keeping an eye on that. Then, if we connect the high to the secondary high, you actually have a wedge pattern. If this rallies, upside would be 142 on earnings. If it does continue to confirm, let's say it confirms before later, you would favor a downside move to about $85. And if this goes down on earnings, this will shake. This is a huge interplay with the AI chip stocks. All right, CoreWeave is essential They have to talk a big game. They have to come ready to showcase great earnings, or it will shake confidence again in valuations of AI stocks. All right, into Bitcoin. Bitcoin getting a little bit of a bounce here. No surprise. Again, we talked about how, again, you were into support just down in this range. You kind of kissed this level. Also, I showed over the weekend, if we take this low here, I'm going to use the Fibonacci retrace tool. If we take this pivot low before this big run up and we go like this and we go to our highest point right up here, okay, and we stretch those lines across, what was this area right here? It was the 50% Fibonacci retrace, right? You guys can all see that 50% right there. And so you can see there was a lot of support there. Now, I don't think it's done going down personally, but you're getting a snapback. Look at where you're snapping back to. Let me clear off this chart a little bit again. Let me get rid of some of these lines so I can walk you guys through. Look at this, guys. You're coming right back in to this area now. This area, look at this, right? You have this low here, this low right here, all of these lows, and this low. And so this should be a big test case for Bitcoin around 107,200. Can it get above, or does it stall out? If it stalls out, look for it to start coming down, maybe a small bounce there, and then eventually get to this lower 94,000, 95,000 zone. That's the big one right there. That's the trend line that goes all the way back to the beginning of the bull run in Bitcoin in 2023. All right, the beginning of that after the bear market. Here was your bear market, right? And then really you started to take off right here on Bitcoin to the upside. Gold today getting a good bounce. Gold again, we know we hit my first downside target. We had that target right in this level. I still think it's going lower, so it's a good bounce today. Obviously, the government reopening means even more spending of money, and so I can understand why gold is catching a little bit of a bid, as sad as that may be. But nonetheless, again, if we're looking at this first target, second target, I still think is coming down here to about the 38.45 zone right in here. But I'll show you what it's doing. It's still staying within its bear flag formation here. If we look at this, we can draw the trend lines up, and there you have it, right? So you still have a down move inside bar, and then the question is, how long do we stay inside of here? And eventually the idea is we should trickle down and break down. Now, remember, I'm mid to long term very bullish on gold. I just think it has more flushing out of the weak hands before it finally makes a big move up. Taking a look at silver today, same sort of thing. Silver bear flagging, good push on silver, but again, connect low to low, high to high, and we're right up in that. We're not quite at the highs yet there, but again, it could go up a little higher to about 50, 65, 50, 75 or so. And then again, we want to see, does that eventually break to the downside per the charts? Looking at oil today, oil again, upticking just a little bit. Again, we talked about a potential inverse head and shoulders. I don't really love this shoulder anymore, but instead it looks to me more like a cup and handle pattern. And again, cup and handle is still a bullish pattern. So I'm still near-term bullish on oil here for a move up, maybe as high as around $66, $67 per barrel. Natural gas gapped up last night when it opened and has pulled back, still slightly positive on the day. The big thing to watch is your weekly chart here. This is your weekly now, and we have a major resistance level up here. It may want to consolidate a little bit before pushing into that, but either way, it is something we'll keep an eye on. All right, guys, as always, I'm here for you. Lots to go on this week. So again, if government reopens, means we're going to start to get data. Not really this week. I'm not expecting them to get the data together this week, but obviously in the coming weeks, we'll start getting economic data. We have to keep an eye on what the Fed speak is, the earnings coming out from CoreWeave, Rigetti. Rigetti's not going to be a market mover, but it's just more interesting because it's been such a big mover this year in 2025. And then as always, folks, watch that SMH extension of the 200. And watch the S&P 500 parallel channel high. Those to me, cut out emotion. Those to me are the two factors right now that have me thinking today's rally could be a bull trap that's coaxing in retail to buy the dip once again, when maybe got to be a little bit more careful. Have a good one, guys. I'll talk to you soon. Thanks and take care. Bye-bye.